Hello friends, you're watching Tax Dosti videos. We are discussing Sindh High Court in favor of FBR regarding section 7E. We are in paragraph number 2. You're watching part 2. Paragraph 2 of the judgment says that at the very onset we may state, this is what the judge is writing, that this is without disrespect to any of the learned counsel for petitioners as well as respondents. Petitioners in this case are all those taxpayers who have assets, who hold assets as of 30th June 2022, and Section 7E has been applied on them. And respondents are FBR, Ministry of Finance, and Government of Pakistan, who have levied a tax on holding of fixed on your immovable property. The judge is saying that their arguments have been noted, recorded in this judgment collectively for ease, convenience, and to avoid overlapping, if any. Petitioner's counsel, and reference is given one. One means that we will see in footnote in order of arguments. Here, different lawyers have been name given who have made the arguments in the sequence. Petitioner counsels have contended that Section 7E, this is what the taxpayer have said to the Sindh High Court, of the ordinance imposes tax on property which is not within the competence of the federal legislative pursuant to entry 50 of the federal legislative list provided in the fourth schedule to the Constitution of Islamic Republic of Pakistan. So the Constitution has a list which gives power to tax different items. So the petitioners, taxpayers are saying through their advocates that in entry 50, the power to levy tax on property is being taken away from the federal government and has been given to the provinces in case of immovable property. That is only the provincial legislation who can tax an immovable property. So in entry 50 it is written that the federal government can tax the capital value of assets except immovable property, which means that now only immovable property, the capital value of immovable property, can be taxed by the provinces, not by the federation, which means the Islamabad government. It can't be taxed by them. So that is Section 7E. Within itself is discriminatory as it provides certain exceptions and exclusions without providing any rationale to such exclusion and or exemptions. That notwithstanding the validity of the concept of deemed income, while imposing tax Section 7E of the ordinance, no transaction has been outlined on the basis of which any deemed income can accrue. The petitioner are saying that first of all, the federal government could not have imposed this tax on capital value or fair market value of immovable property. Secondly, they are saying that this tax is discriminatory. It taxes some people in the same group but allows other people who hold property not to be taxed. So this is discriminatory because every person holding immovable property should be taxed or should not be taxed. But if some of them are taxed and some are not taxed, then this is discrimination within the group. And group is means people holding immovable property, especially above the value of 25 million. And it is also saying that it does not fall on the concept of deemed income because there is no connection, there is no clear connection in the law where we can see that how income can be generated from a property that has not been given on rent. The tax can only be imposed on income from property, whereas under Section 7E, even properties which cannot be let out or generate any income have also been included, meaning that they are pointing to plots and such property which cannot be given out on rent in any. There are no markets for residential plots or some other properties which can be given out on, they cannot be given out on rent. This is, there is no property. Houses, flats, commercial buildings can be given out on rent, But in this section 7E, agriculture income, open plots, and even files which become plots in the future when the housing authority develops those area, have been included in this section. So files can by no means be given out on rent, since they are only marker of land and no clear marcation has been given until they are converted into plots. And even then, plots, especially residential plots, cannot be given on rent for any purpose. Um, and then there is no concept of any fictional income, as it is alien to the ordinance. And the concept of such type of fictional income is alien to the ordinance. There is no other section in the Income Tax Ordinance 2001 which deals with those things. That in pith and substance, this is a technical word, it is a tax on immovable property. Pith and substance means that in reality, or if we remove the fancy wording, the simple the section 7E is simply a tax on immovable property which cannot be levied by federal legislation. That is an attempt or colorful exercise of power under the Constitution so as to impose a tax for which the Constitution does not confer any authority upon the Federation. Federation meaning the government in Islamabad, and they have used indirect means of taxing the immovable property, which can now only be taxed by, and revenue can only be collected by the provincial governments in their respective provinces. That it has also failed to take or provide basis and differentiate in the nature of property, its location, and the earning potential. If at all a tax has been sustained, that even such properties have been taxed for which there is no permission to raise any construction, meaning plots and files and any land that is disputed and any land that is not part of the property the housing schemes or commercial area, even those have been included in this. And this is illogical and does not make any sense. That there is also an anomaly. Anomaly means a problem in the law in the holding period of the property in question, that per settled law what cannot be done directly cannot be permitted to be done indirectly. That as and when deemed income has been held to be valid and legal, it has always had nexus with respect to generation of income or a transaction which can lead to an income. That the concept of deemed income was introduced to avoid benefits being claimed through losses, whereas in the instant matter it is not present, meaning that these sentences mean that since many of the immovable property, until they become completed constructed houses or commercial plazas or some constructed property like hospitals, schools, they do not generate income. And if such properties which are not constructed are included in section 7E, it is illogical. And even if deemed income was considered in previous examples, in previous sections or previous cases, it was with reference to a source of income, not such things which will take years to earn income, but which are earning income right now. Then the speech of Finance Minister while introducing this levy by way of Finance Bill is very relevant in much as intent and object of the said levy as disclosed to discourage holding the property which does not fall within the domain of federal legislative, that it amounts to violate the federal rights as enshrined in Article 23 read with Article 253 of the Constitution, that if at all the impugned levy is to be sustained vis-a-vis the speech of the finance, it ought to have been levied through the Act of Parliament by following the procedure as contemplated under Article 70 of the Constitution, that is fact, an attempt to control the ownership of immovable property. Hence, by the way of finance bill or a money bill introduced through Article 73 of the Constitution, no valid legislation can be made. That tax can only be levied when there is an earning potential which admittedly in the present facts and circumstances is lacking. So they have referred to the speech of the finance minister, that what he was saying, and to the Constitution Article 23, right to own property, read with Article 253 of the Constitution, that they should have made this law through the money bill, and they should have showed what kind of income is being taxed, and in essence imposed tax on property in pith and substance, meaning that this tax is not on any income, be it deemed income, but it is rather a tax on the capital value of the immovable property, and that tax can only be levied where there is earning potential. So all those properties that have been included in this, like files, plots, those lands which are disputed, or those lands or those properties which are not able to be cultivated for agriculture purpose, or cannot be constructed upon, including those, is unconstitutional, because there is no future earning potential from such property, and they should not be considered. Only such assets should be considered, like constructed houses, constructed plazas, fertile agriculture land, etc. So all of this argument relates to these points with reference to the way this law was made, and with the reference to the fundamental rights of the taxpayers and citizens. ठीक है जी. Going forward, that it fails to pass the twin test regarding discrimination as settled by Honorable Supreme Court of Pakistan and India, that in essence it imposes tax on property and in pith and substance, meaning mainly its focus is not a tax on income or deemed income, that even otherwise it has been imposed retrospectively for the current year. This is the fourth problem which this law has, that this law has been applied retrospectively for the current tax year, meaning that if Finance Act 2020-2022 introduced this law, it should be applicable for tax year 2023, which is going on and will end on June 30th, 2023. Today is 29th of January 2023. So this law should not have been applied retrospectively, because the taxpayer didn't have time to plan his tax, especially people who have dual nationality, who have a choice of being taxed in US or UE or in Europe, and then can plan accordingly their tax residency for each year. So by applying retrospectively, it's a surprise. This is the fourth problem introduced, whereas it could, and this is the judgment that the judge is writing, that all these points were raised, whereas it could only have been levied, if at all, from the next tax year, that is tax year 2023, that it is confiscatory in nature, in as much as there are instances wherein the taxpayer, notwithstanding holding of various products, is not generating any income so as to pay the tax on its deemed income. So pensioners and people who have genuinely bought properties or who are holding properties in their own name on behalf of other people, the tax rate for them will go up to 40-50%, and that is confiscatory. That is a level that is too high as compared to the average tax rate of an average taxpayer in Pakistan, that is 15-20%. So paying income tax at rates of 40% above is confiscatory, meaning that it is too much, and this load cannot be borne by the taxpayer. That when the finance bill was sent to the Senate of Pakistan, a resolution was passed against this very levy, and the advice of Senate must not be ignored, that all deemed income have some nexus with the business activity, which in the instant matter is lacked. Meaning nexus means connection. So if a file or plot is considered to have generated income which it cannot generate income even in the future, then how can this income be taxed if a file of a plot or a plot property is unable to be given out on rent even in the future? So there is no nexus between most of the immovable property being taxed here. That it amounts to double taxation as property tax is already levied by this is also one of the problem, that if people are paying property tax on their income, why then another tax in the shape of income tax is being levied on the fair market value or capital value of the tax? That it fails to meet the settled principle regarding discrimination, intelligent differentia, that exclusion and exemption provided to various persons within section 7E even issue must have nexus with some policy objective of the government, which is present facts and circumstances completely lacking, meaning that the people whose property has been included, there is no clear-cut policy why those people have been excluded, and there should be clear government policy objective that why people who have property are being treated differently, are being excluded. For example, people from the armed forces, government and federal government, and people who have bought recent properties, they are being excluded, and people who are holding properties for future benefit and their future generations are being penalized with this tax. That an idle property is being taxed under the grab of deemed income, that when the levy itself offends or goes against the competent offender, no concept of deemed income can be invoked, that the levy amounts to crossing the legislative boundary which cannot be sustained, that a tax levied and through section 7E lacks a triggering event, receiving of income or money. Whenever a taxing event means whenever the income arises, the need to tax or the need to get exemption from tax arises, which is called the triggering event. So no such triggering event is being triggered, no property is being sold, no property is being bought. Only a person is holding property as of 30th June 2022 and he is being taxed for that. The mere holding of immovable property cannot lead to any tax by way of fictional income, and therefore by placing reliances on the cases reported, as we will see footnote, all these footnotes have all these cases which you can then check out with their reference like PLD 1957, Supreme Court, etc. And drafting has been done very well in this case. They have prayed that the provision in question is liable to be declared as ultra. These were all the objections raised by 208 petitioners and their lawyers. And in the next part, part 3, paragraph C, we will see how the respondents, that is advocates, Advocate General, advocates of FBR and Ministry of Finance, responded to all these allegations or all these claims that this law is a invalid law. Thank you. See you in part 3.